Hello, everyone, and welcome to the Saaghe Fogwe podcast. If you're just joining us, if you're not subscribed, go ahead and click the subscribe button already so you can see when we go live. And for those who are already subscribed, we thank you for that. And just share the link because the topic today is a wonderful topic that our community needs. We have a lot of business owners, we have a lot of people doing wonderful things in the community, but they're not maximizing their taxes. So I have a special person here. He's very important to me. He's my personal CPA. I can say that, but he cannot because of HIPAA, right? So he's mine. I don't want to keep him to myself, and that's why I brought him on today to share with the community. So before we go into it, let me bring on to the stage, to your screen, Mr. Elvis Langha. Welcome, brother.
Thank you so much. How's it going? How's everybody doing today?
We're good. We're good. I'm here. Toride is here, on the mic and in the background doing his thing. The producer. We're all here.
That's good. That's good. Well, thanks for
Yep.
having me on your show.
Thank you. It's been a long time coming. We've been planning this for months, and this man is busy.
Tell me about it.
Especially this season. To have him on this show in March, this is I had to pencil myself into this calendar because he's a busy man. But before we go into it, I shared the link with you. If you want to share with whoever, we can do that. But we want you to introduce yourself officially to everyone. So those who don't know you, they know who you are, where you come from, what makes you tick, your goals, your visions. He's taken, by the way, ladies. Don't start salivating. He's taken, very taken.
Oh my goodness. Oh my goodness. That's funny. So okay. Well, my name is Elvis Langha. I'm a fellow Pemexan, Saaghe's fellow Pemexan. In case you're wondering, for those of you who don't know what Pemexa is, that's our secondary school back in Cameroon. So we go way back. She's an older sister. I mean, not in that way. She's kind
old.
of
Yeah, she's old. It's okay. She's old.
She was ahead of me in class. So when I was for those of you who are familiar with the Cameroonian school system, when I was in Form 1, she was in Form 4. So, and both of our parents all happened to hail from the same area. So that's, we always kept in touch. But to long story short, I work in accounting. I've been doing accounting now for about 15 years. Been a CPA 12 of those years. And it's been a very, very fascinating journey. I would not swap this for the world, for anything in the world. It gets sometimes really, really hectic and busy, but I was still up in for this 10 times out of 10. So right now we are in the midst of tax season. We're filing taxes. We just finished the first major deadline a few days ago. So March 15th is when S corporations partnership taxes are due, and it could get really, really, really stressful. I go home. I've been going home late to my family, and my wife is. They don't know who I am. I'm like a vampire.
He likes the check, though. I would like the check. You can stay as late as you want. Bring the check.
Exactly. I'm out early. I'm back late. So still try to find time during the weekends to catch up, because at the end of the day, we do this for our families, and it's not going to be worth it if you put in all that time and end up not having to enjoy and spend that time with the family. So I make sure that I always dedicate time to my family. But back to myself, I'm the owner and founder of LGE Advisor Services. We are a Maryland-based CPA firm, and we are full service. So we offer accounting, payroll, taxes, bookkeeping. The only thing we don't offer at a firm currently, we don't offer attest services. So attest services are audits. If you want your financial statements audited from an independent accountant, you would go and a CPA would do those, would prepare those for you. So we do not offer any audit services. Other than that, consulting, selecting the right business for yourself when establishing, we can help guide you with all of those things.
All right. So yeah, so I mean that's that's his background. That's Elvis, the person. And then we're gonna go into, a little bit more about because and break these terms down. Not everyone's,
Oh,
break it down because some of these terms, some of us are like, wait, what?
yeah, yeah, that's
So
true.
yeah, so kind of start from the beginning, like what the different types of businesses. Who
Correct.
is a business person? Because mom and pop here and there, like break down the different types because there might be people who are in our community who are business owners and they don't even know that they are
Correct.
because they don't
Correct.
know what a business owner is. So please help us break that down.
Correct. All right. Well, there are different types of businesses, right? Different ownership types, and we're just going to go over a few of them very, very briefly so that you can get a full understanding. You can have some insight, because I know some of these terms get thrown around left and right, and people are like, "Oh, what is this? What is that?" So we are going to start with the oldest form of business out there, which is the sole proprietorship. So to become a sole proprietor, you don't need to register anything with the state. So all you need is just some talent, some capital, and some skills, and you're in business, And most common type of sole proprietorship would be what you also do, like if you're an insurance salesperson, you do not need to go set up formally with the state. So just by presenting yourself and putting yourself out there, you're already in business. We wouldn't recommend that typically because because of the liability aspect, and we're gonna talk about the other businesses on how to shield your assets, protect yourself from any third party creditors. So we'll talk about that. But long story short, main advantage of a sole proprietorship: very easy to establish, and then you're up and running. All you need is just some talent and some capital, a little bit of capital. Major disadvantage: when you pass away, the business is out. It's gone, done. So that's one of the major disadvantages of having being a sole proprietor. And then we move on and we talk a little bit about LLCs. So LLCs stand for limited liability companies. A lot of people always confuse the C. A lot of people say it's a corporation. It's actually not a corporation. So the LLC, the C, and that LLC stands for company. And LLCs are set up with the state, and then they organize. So you organize an LLC. You do not incorporate an LLC, by the way, because that's another very, very common mistake that I hear people say, people throw out there. They say, I'm going to incorporate an LLC. No, you incorporate a corporation, which we're also going to talk about shortly. But LLC is organized, and they're pretty much like, you can have a single member LLC, which is run by one person, or multi-member LLC, which, you bring on a partner, and then there's multiple people in the organization. And why would you set up an LLC? You set up an LLC because you want to protect your asset. It's for asset protection. You don't want creditors infringing your personal assets. And one major advantage of the LLC, of course, is that you put yourself out there, and then you're official, and other people want to do business with you because your LLC is going to be some name LLC behind it, instead of being Elvis Langha as a sole proprietor. So LLCs are not set up to save taxes. A lot of people always say, "Oh, I'm going to set up an LLC and it's going to save me taxes." No, that's not the purpose of setting up LLCs. You set up LLCs because you want to just protect your business from creditors. So you want to protect your assets from creditors. So as you're running your LLC, we always encourage people to not commingle assets. So, commingle your personal and business stuff. So commingling is where we have a lot of clients, unfortunately, who have a bank account, and then they use it for McDonald's, they use it at Walmart, and
African
all
store.
that.
I've been
So
called out a few times for that. African store purchases.
yeah, so when you're in that situation, commingling, not only is it difficult to sort out business and personal at the end of the year, but there's something called piercing the corporate veil. So piercing the corporate veil, think of it this way. When you have your LLC, that LLC is to protect you from creditors, right? But if you're commingling your personal and business assets, if you go to court, if you get sued today and you're taken to court, so the courts are gonna examine the operations of your LLC, and then they're gonna pierce that corporate veil. So that veil that's protecting you from creditors, the judge is gonna pierce that and come after you personally, because they're gonna say, well, you have not been running the LLC as an LLC in a way. You've been commingling the whole time. So that's when they will come after you personally. So please beware and stay away from commingling your personal and business stuff. Then, of course, the next business structure we have here, corporations. We all know what corporations are. Corporations, to set up a corporation, you incorporate with the state, and then you run it as a C Corp. So the most popular types of corporations will be the C Corps. Mm-hmm. There's also personal service corporations, but we're not going to get into those details today. But so one of the major advantages of a corporation is that it can continue in perpetuity. So if you bring on shareholders and then you pass away today, God forbid, those other shareholders, they can still continue running your business, mm-hmm. right? Think of Apple. Steve Jobs has been gone, but the business is still going on. So that would be a corporation. That would be a very typical example of a corporation. And one of the major disadvantages of corporations is the aspect of double taxation. I'm sure people have heard of what double taxation is. Mm-hmm. What is double taxation? The entity, the corporation itself, is going to get taxed. So if the corporation generates a net profit, that profit gets taxed at whatever tax bracket that corporation finds itself in. Right now, there's a flat tax rate of 21%. Every corporation gets taxed at 21%. So that corporation is going to get taxed. And then the shareholders of that corporation, when they get dividends, those dividends are going to end up on their tax return and get taxed again. So that's what we talk about, double taxation. So that's one of the things we always discourage our clients, especially as your income starts ratcheting up. We say, hey, you know what? You might want to think of doing an S Corp election, which, by the way, we're going to segue into that shortly. So S corporations, an LLC or a corporation or a C corporation can pretty much do an election to become an S corporation. Am I being too technical, or should I?
What is the S stand? What does the S stand for?
So S is just a subchapter in the Internal Revenue Code, right? That S is just subchapter S. Some people call it small corporation, but that's not really what it is. So it's just a code in the Internal Revenue Code. And why would you want to do an S corporation? Why would you want to elect to file as an S corporation? Because you want to avoid double taxation we just talked about, right? If you run your business as an S corporation, the net income is going to flow through to your personal tax return and get taxed once and only once. So you avoid that double taxation. So as your business grows and you don't want to pay a lot in taxes, you might want to think about doing that S Corp election.
So let me ask you. So that is the designation that will help with the shelter for taxes, as opposed to people thinking that the LLC will protect their taxes. So the extra designation of S Corp helps with kind of minimizing some of the tax expenses, correct?
Excellent point.
Okay.
Yes, excellent
point. Trying to break it down to, non-CPA.
Yeah. Excellent
non-CPA
point.
level.
Excellent point. Yes, so to optimize your tax situation, to reduce taxes, to avoid taxes, not evade. I always tell people, hey,
No,
we're
not
not in the
evade. We
business.
don't do
Yeah,
it. We're not here to. No, no, no. Facebook.
yeah.
We're
Evade
not
is a very,
evading
very bad one. Yeah, because
Yeah.
you end up in jail. Yes. So to optimize your tax situation, that's when you want to do an S corp election, right? With an S corp election, not only do you get to pay taxes once and only once, you avoid the so-called dreaded self-employment taxes, which we're going to also talk about. I think a little bit. We're going to touch on that a little bit, but you avoid. So that will be a way to kind of help limit the taxes you pay annually.
So, yeah. So, okay. So those were the different types of businesses, correct?
Correct. Yeah, in a
Well,
nutshell. Yeah, in a
yeah.
nutshell.
What about partnerships?
Partnerships, that's actually that's a great question. So partnerships, LLCs, right? So an LLC that has more than one member, right? So LLCs, the owners of LLCs are called members, and then the owners of corporations are called shareholders. So the members of the
Say that
LLC,
again, Elvis. Say that again, please.
okay. So the owners, so LLCs are owned by members, right? And then corporations are owned by shareholders. Very, very important distinction to have and keep in mind. So if you're a single member LLC, you're going to file one tax return. So the tax return, you're going to generate something called a Schedule C on your personal tax return. It's just a schedule. It's called Schedule C, and it's profit and loss from a business. So that's filed by one member LLC. If you have more than one member LLC, then you file a partnership return. It's a Schedule 1065. And then every partner in that LLC gets something called a K1. But again, that's being too technical. We're not having a tax class here today. But partnerships do exist. So you can actually set up with the state. If you're a doctor, a lawyer, engineer, accountant, they can actually set up something called limit. Sorry, my glasses keep sliding now.
You've lost some weight.
Something...
The face has shrunk a little bit. The glasses don't fit.
They're too big. Yeah, they don't. So I gotta keep. My apologies. So those professional organizations, right? They can set up a limited liability partnership. So if you think about like big engineering firms, they're set up as limited liability partnerships, doctors' offices, and so on and so forth. So yes, you can indeed set up. Certain states actually mandate that if you're running a business as a professional, you have to set up as a limited liability partnership.
Okay.
Yeah,
and then if we go like to nonprofit organizations,
yes.
would those fall under the business types of business? Would you call it a business per se? Because we have a lot of people in our community with nonprofit organizations.
Okay.
Speak a little bit on that as well before we go into other things.
Okay. Yeah. So nonprofit, everything. So the way I look at businesses, right? If you set something up with the ultimate goal of making money, it's a business. So let nobody fool you. Churches are businesses. Do we all agree? Yeah. so
all our pastors out there, are you listening?
They're actually some of the
those
richest
who have said
people.
their church is not a business. It's not true.
That's not true. That's not true. So pastors are actually some of the richest people out there, as you know. But with the nonprofits work a little bit differently. So a nonprofit, you go out there, you're gonna either set up, depending on the state law, right? Depending on the statutes of a particular state, you're gonna set up your business either as a corporation or an LLC, and then you're gonna do you're gonna file a special request from the IRS. You're gonna request that 501c3. It's called a 501c3. Not an election. The word is the word's skipping me right now, but it's a 501c3 organization. And 501c3, when you become a 501c3 organization, you file a form called Form 1023, and then the IRS is gonna scrutinize your documents, really examine the exempt purpose of your nonprofit. They're going to determine if the mission conforms with a nonprofit, and then they're going to officially approve you as a 501c3 organization. So 501c3 is just it's one of the nonprofits out there. So there's different types of nonprofits, but the most common one is the 501c3, and that's the public charity. And with the public charity, the IRS is going to set you up in their database where people can look you up officially and determine if they can donate funds to you. So when you set up as a 501c3, of course, the business can make $1 million in income net, right? So the profit could be $1 million. You're not going to pay taxes on that. You're not going to pay taxes on that income, that net income, because as long as you are adhering to your charitable purpose, the IRS is going to say, listen, you're not paying taxes on that. There is something called unrelated business income, UBI. Unrelated business income is when you are not furthering the exempt purpose of the business. That's when the IRS is going to say, all right, we're going to tax this. So what is the threshold? Very, very low, $1,000. If you're not sticking, if you're not following your exempt purpose and you make more than $1,000, then the IRS is going to come in and tax you. So that's why whenever we're preparing nonprofit informational returns, we want to make sure that clients are really, really sticking to the exempt purpose.
Okay. And a good example is, ex-student associations, a lot of them are 501c3 and, designations, just so people can relate to it. Like most of us, we set those up for charity purposes. And we have a lot of people in our community who have those. But I think this is good so that people can hear it. That's why, you need an expert. You need someone like Elvis in your corner doing taxes. You heard all those forms that he's as some of you know, I was a staff accountant for 10 years, but taxes were never my cup of tea. I did not like taxes, never have. That's why I have someone else, because some people are surprised that I have someone doing my taxes. I was never a CPA. I did attempt the exam, but I was never a CPA. And even if I were, I probably would have not been a tax, focus on taxes.
That is true.
I like the pretty stuff. All right.
It's actually also a very common misconception. All CPAs are always commonly misconstrued to prepare taxes. CPAs can go into different fields. I know CPAs actually do taxes for other CPAs who don't have anything to do with taxes.
With taxes, yeah. So that's good to know too, because you might have to mentor people in our community too. That's something that I know the PEMEXA. I always go back to PEMEXA. It looks like my Neville is buried at PSS Mancon. So I always go back to PEMEXA. That's one thing that we are aspiring to do, to have mentorship. Like if we have people who are expert in a certain career to mentor other people. So those are things that, if there are people showing interest, they need to know that up front. So they're not just having these stereotypes about being a CPA or, being an accountant. And that's just an aside. So my next question is, why would any of those people in those businesses think about going into business with a spouse, with a child, with a family member? What is the advantage of having people from your family be an employee or part of the business?
Well, one of the oldest tricks in the business book, one of the oldest things we always elaborate on that. We always want our clients, if you want to hire your family members, okay? Because as long as you hire them in a bona fide role. So bona fide means it has to be legit. Don't just put them on your payroll because, I want to write stuff up. They have to actually be doing something for the business. Okay. So right now, if you have children and they come to the office and then they lick the envelopes, and then send dispatch mail, that's them working, right? Mm-hmm. You can pay them in 2024. You can pay them up to $14,600. So that's a standard deduction. So up to $14,600
annually.
Annually, no taxes, nothing, no payroll taxes, nothing, and then you write it off. But they have to be employed. When my son gets to, when he becomes able to work, when he's capable to work, he's going to be working here.
Yep. He has no choice. That's a legacy.
He's going to work. I'm not going to give him pocket allowance.
And I still haven't met him yet. I digress. I still have not met my nephew. I'm sorry.
Oh my goodness.
Every time I've been in Maryland,
Yes.
this man is either out of town or is not
Right.
anywhere around. So I have not met my nephew. I need to meet him.
I mean, it's my fault. I take full
July.
responsibility for
We
that.
have a date in
July.
July.
Definitely.
All right.
Definitely. Yes.
Go ahead. I digress.
Yeah. So, like I was saying, right? I mean, instead of providing pocket allowance to your kids, hire them, put them on payroll, and write it off for taxes. It's a big time win-win, And then if you can employ your spouse, hire them, right? Not only do you get to write off the W-2 income, their payroll, you get to write that off, but you can actually also put them on some kind of retirement plan. Those are more tax deductions that are coming off the table. So there's ways to like avoid paying taxes. People, of course, don't always try to outsmart the system. The system is always going to come after you. But by putting in those small strategies into play, you get to write off. You get to have a lot of tax write-offs. Yeah. So my mantra is always, hey, bring your spouse on, put her on payroll, get her 401k. That's the business paying. Right?
Yeah.
And then you're right. Those are deductions just coming in, that you normally would not know. Yeah.
Yeah. So y'all heard it. Because it's difficult, because that's one of those things that is difficult, because most people have trouble working with family members, because you see them at home and then you want to go to work to take a break, and but keeping that in mind, this is good information, because keeping that in mind, people can see the benefit of it. So we start thinking business like, because it's not like our community doesn't know how to make money. We know how to make money.
Correct.
But the
Correct.
thing is, how much of that money are we keeping?
That's true.
How much of it are we keeping? And like we said here, we're not teaching people here. We're not talking about evading taxes. We're talking about using the system with integrity, not abusing it, and making sure that we're getting the benefits from it. And so that's why I wanted to ask that question, to make sure that people know that you can keep it in the family. When we say keep it in the family, you're keeping it in the family, and all of that is coming back to you. And like you said, instead of putting kids on an allowance, doing all of that, you're teaching them work ethic. First of all, you're giving them a legacy, because I'm always about legacy, about passing something down, because we want to keep keep it in the family and pass it down for generations. And get that benefit from it, because you're keeping money at home. So my next question to you is worker classification, employer. I had to make some notes here, because these terms were too much for me. I had to make notes. It's been a while. I stepped away from accounting years ago. I'm now in the medical field. But I still have to, refresh my memory on these things. So employee versus independent contractor. Just give us a difference between those two. That way people can understand what it is to be an employee and what it means to be an independent contractor.
Well, you can, as you run your business, there's two ways you can bring in workers, right? You can either hire them. So employees are your W-2 workers, and by W-2 workers, they're actually on your payroll. And then each time you process payroll, tax deductions, tax withholdings come out and get sent either to the IRS or the state, and so on and so forth. That will be an employee. And a lot of people, unfortunately, try to trick the system by hiring workers as independent contractors. Because with an independent contractor, you don't withhold any taxes. You don't pay any employer taxes, because payroll consists of employee and employer taxes, right? There's employee portion and the employer portion. So in order to kind of reduce the tax liabilities, certain people are going to try to circumvent the system and hire people as independent contractors. So the IRS actually frowns down on that, because the IRS knows that, hey, listen, we know you're doing your very best not to give us a share of that pie. You want a share of that pie. And if you attempt to misclassify your workers, we're going to come after you, and we're going to come after you to the fullest extent of the law by not only taking back what belongs to us, we're also going to penalize you. And think of it. I once had a case where someone had misclassified their employees, and it went on for a very long time. So think of it. 10 years later, the IRS finally finds out, right? What happens after 10 years? The IRS is going to go, oh, wait, you owe us interest for 10 years. Then these are the penalties, and boom, all of a sudden you're out of business. So don't try to game the system. Just do what's right. If you can't afford people, you can't afford employees, you can also hire independent contractors, but make sure they're independent contractors, right? And who's an independent contractor? What the IRS looks for? The IRS looks for control. Do I have control over when a person shows up at work? Do I have control? Do I provide them with equipment to work? So the IRS is trying to see what elements of control you have. If you're manifesting a lot of control, the IRS is going to say, hey, just be conservative and classify them as an employee. So if you're not sure, I always tell clients, if you're not sure, W-2. Don't try to be cute and say, nah, I think we're just gonna leave them as independent contractors. Happens all the time. Yeah. So
that really explains a lot. But my question, a segue to that, I guess my question would be, so if someone were to do that, to classify an employee as a 1099 contractor, right? The contractor is also obligated to file taxes, correct? So they're still going to collect on the employee, the contractor, in quotes, they're still going to collect from them. So why would they come after the employer?
Because the burden of proof is always going to be on the employer, because you're the one who, at the end of the day, remits those taxes to the authorities, right? To the state and the IRS. So the burden of proof is on you, so that you have to prove to the IRS why. Because that person, they're going to say, I don't know why they hired me like that. I told them to take out taxes. And I do have clients, the ones we do annual taxes for. I say, why are you a 1099? You're not supposed to be a 1099. And this happens very commonly with home health aides, right? They get hired as 1099s when they're supposed to be W-2 employees. Granted, the employer is not there to supervise you when you show up, but you still have to clock in and clock out at a certain time. So that's already control you have over them. The IRS is going to say W-2 employee.
Yeah. Wow. That's very enlightening. I mean, parts of that I didn't really know. So I'm glad we're having this conversation, and this might be a part one of multiple conversations that we'll have whenever we can buy time from this busy man. Talk about different withholdings, so people can understand what the different withholdings are. I know you kind of touched on them a little bit, but just explain a little bit about withholdings, because people probably don't understand the breakdown and all that, and we just assume that it should be a certain way, and we don't even know what these are. Explain that to us.
Yes. Okay. So very, very important element, and this does not apply only to business owners. It is very important that everybody who submits tax returns in the United States. So if you file taxes in the United States, you should understand what's on your W-2. So when you look at your W-2, you're going to see there's different boxes. There is something called federal withholdings, then there's a state withholdings, and then there's FICA and SUDA. You're not going to see SUDA on your W-2, but we're going to talk about that shortly. So the very first one is a federal withholding. So federal withholding is based on how you fill out your W-4. So when you start a job, they're going to give you a payroll package. You're going to fill it out, and then you're going to say, okay, I'm taking an exemption of $2,000. I'm going to be head of household, or single, or whatever. So your withholdings are based on however you fill out your W-4. So it's automatic. It's already calculated and built into the system. Same thing with the state. So state and federal is what actually comes out of your of your paycheck. Then you have Social Security and Medicare. So that's FICA, stands for Federal Insurance Contribution Act. So when you look at your W-2 or your paycheck, you're going to see Social Security, Medicare. What is that? Social Security is your income when you retire. So when you retire, that's what's going to get paid back to you in terms of Social Security. Because another problem
if you get any,
yes,
that's a topic for another day.
That's a topic for another day. Yeah, so we often face this problem as well, where people say a lot of taxes got taken out of my paycheck. Why am I not getting a big refund? That's because Social Security and Medicare don't count. So Social Security is your retirement income. Medicare is your hospital insurance. So the government is taking it out now so that down the road, you're not out here on the streets, sleeping and begging. So those two components of your W-2, right, Social Security and Medicare, get matched by the employer 100%. So that's why whenever you look at, if you run a business, payroll is always going to be the highest cost that you can ever encounter, right? Payroll costs are extremely high because you as the employer, you have to automatically kick in 50% of the Social Security and Medicare that's being withheld from the employee's paycheck. Then, of course, we have something called SUTA. SUTA stands for State Unemployment Tax Act. What is this? The employer has the liability to cover their employees in case they get laid off for no cost. So when you get laid off for no cost, if I come today to you and I say, hey, you're fired, and you're like, why did you fire me? Of course, most states are at will. Most states are at will. They don't have to explain to you why they're firing you. But that SUTA is the portion where it's like insurance. You as the employer, you pay into that insurance based on certain income thresholds, so that when an employee loses their job due to no cause of theirs, they can go seek unemployment insurance. So everybody's paying is because the state has to fund that. And the state does not have money sitting in their coffers, right? So what they do, the employer actually funds them through that insurance, SUTA, State Unemployment Tax Act. And of course, if you're very unruly at work, if you're not a good employee, and then you get fired,
and they have a track record,
and the employer can prove that, listen, it was your fault. You're not gonna collect unemployment. I've personally been there. I terminated somebody, and then they went to seek unemployment, and I just pulled up my records and say, hey, because each time someone goes and seeks unemployment, you get dinged. So by getting dinged means your unemployment insurance rate goes up. Think of it like,
wow.
You get into an accident. If you get into an accident, what happens to your premiums? They go up. Same thing with social, same thing with unemployment insurance. I actually once had a client, which was so funny. He was trying to help his friends. Please don't do this. Don't do this. He had a bunch of his friends and then fired them. And then they went and sought unemployment insurance.
I said, oh my gosh.
Illegal, very illegal. I said, why? I mean, that was before he became my client.
Yeah.
And then a few years later, he was paying the highest unemployment insurance ever. Why? Because you try to help people, and then that's how the situation you find yourself in.
There are just the little things that we don't know about that, that affect us as being employers, because we want to be independent. We want to be employers. We want to be business owners. But these things that we've gone over today really help, because people have to think, and when you see people shying away from hiring and trying to do it all by themselves, that's the reason, because there's a cost to all these. But if that's the reason why we have to do the consultation ahead of time and not try to do it ourselves. Correct. So if like I could have just said, oh, I have some history with accounting. I can do it myself, but I
Mhm,
don't want to.
mhm,
I don't want
mhm.
to. I want the expert to do it. So the reason we're having these conversations is so that our community should start thinking about, if I'm not good at doing something, reach out to who is good at doing it so that they can do it for you or advise you on it. And that's why you did mention your services. Some of it is the consultation. So talk to us about what a typical a client who just comes to you and just wants to consult, what you would need from them, what does that visit entail or that appointment entail. And I know he has turned down people. So this man, let me tell you how how integrity is important to him, and organization and things like that. He has actually have referred people, and and he's gone through the profile and said, no, I'm not, like, he's not just hungry for clients. So you have people who just want to have like 100 clients. He's not one of those. He actually will visit with you, go over everything, and then see if you both are a match. If he's not a match for you, he will not take you on as a client. So go ahead and talk about consultation.
Well, one of the main reasons I left my full time job and started this, right, was because I never wanted to be miserable doing what I'm doing. You know, I want to work with people who are a good fit for us. So, and we have structures, we have policies in place. So, a typical consultation, I mean, of course, you are going to tell us what you're looking for, what your goals are, and then we'll sit down together and just come up with a profile. So I mean, we're not profiling per se, but we determine how we can help you because we are in the business of advisory. I mean, the name of the firm is LGE Advisory Services. So we provide advisory services. So first thing that we do, we would actually schedule a meet and greet, and we talk a little bit, and then you get set up with a portal, and we'll send you some questionnaires. You answer those questions, then we will determine how to move forward, if we're moving forward or not. You know, and people come to us in different capacities. Some of them, they want ongoing services, right? Like I said, we offer accounting, we offer payroll, bookkeeping, and then annual tax preparation
Mhm.
services. Some people, they come to us and say, "Hey, can you just help us with our monthly accounting and payroll?" Yeah, we would onboard you, and then, you know, at that point, it's a recurring affair. Others come to us for one-time services. Can you help me determine the best business type to select? And
Mhm.
one thing I always say is that I'm going to be able to advise you from an accounting and finance standpoint. I'm not a lawyer. I do understand that, but I'm no legal expert. So uh, I always try as much as possible to stay within my lane. You don't want to go say, you don't want to put yourself out there as a lawyer and then tomorrow you get sued. And not only are you going to lose your license because our licenses are public, right? I mean,
Mhm.
you can go in any state database, you can look us up and you can report us, so that's why they call us certified public accountants. We're
Mhm.
public. So if you're doing a one-time, one-off consultation, we would we, of course, prepare something called an engagement letter. An engagement letter just outlines the services, the terms of the services, what our fees are, and then once you sign the engagement letter, uh, it's off to the races. So again, consulting is, and of course, I always try as much as possible to be able to foster relationships. By that meaning that many people have come to me for one of services, and then they ended up on retaining us for continue,
Mhm.
yeah, for monthly
Mhm.
services. So again, it all depends on what you're looking for. I mean, one time, one off. And another thing too, we offer tax resolution services. So I'm sure you've heard over the radio, you've heard, oh, you can settle with the IRS for $1 and so on. Those are lies. Those are lies, by the way. Those are lies. Can the tax liabilities, can the tax debt be reduced? Absolutely. But people who do that, they're just marketing companies. And if you owe a lot of back taxes and then you come to me and I look at your assets and then you have, $1 million in the bank, forget it. The IRS will never settle with you ever, because people think, oh, They come and I'm looking and they have a lot of money in the bank. They're like, can we just negotiate with the IRS? I'm like,
No.
they're gonna request this stuff. Forget it. Yeah. So again, all depends on what the client or the prospect.
Awesome. Yeah, no, integrity again, that's one thing that's important to him. Talk to our community specifically to our community when it comes to you've touched on a lot of things. We've touched on business structure, taxing, and all of that. Speak specifically to our community about the importance of taxes, about the importance of being business owners. Like when I say our community, the African community, this show is not only about Africans, but I just want to take this moment to kind of speak specifically to Africans, because or let me say foreigners. Let me not say Africans, because I have friends who are not African, right? People who have come here to the US from somewhere else. Speak specifically to these people. We're kind of rounding up here because I know, we've touched on a lot of things. There were a lot of CPA terms that people will have to go Google later.
And they can reach out to us if they want. Yeah.
Yes, definitely. And I'll put your contact information in the link and all that. So go ahead and speak to our community to kind of summarize everything.
Kind of wrap up. Okay.
Yes.
Number one, don't try to outsmart the system. I know back, do we even pay taxes back home? No, we don't pay taxes, right? Do we?
I don't remember. It's been so long, almost 30 years.
I doubt.
I didn't work in Cameroon, so I don't know.
Yeah, I don't think so. I mean, even if I don't know. Yeah, but we typically bring that same mentality here, right? That, hey, I don't want to pay taxes. I do remember I have prepared people's taxes, and and then they would tell me, hey, can you make it disappear? I'm like, I'm not in the business of magic. I'm in the business of tax and accounting. Okay, I can't make that number just disappear. Poof. I can't. So number one, don't try to cut corners. Right? If you are going to run a business, run it in a professional manner. Hire the right professionals to help and guide you. I mean, if you need lawyers, get lawyers. If you need accountants, get accountants, and so on. Do not try to DIY everything. That's something a lot of people try to do. They think, they're going to figure it out as they go. I'm going to tell you something. I'm in the business of accounting and taxes. Every day there's something new. I'm always learning something new. And I think, this is everybody's profession in some aspect comes with learning every day. But I think in our profession, right, we're always learning. When the new government comes into place, they're going to switch tax codes again. I mean, we are now on Trump. A few years ago, we were on the other one. We got to learn a different tax code.
Okay, wrong administration.
Yeah, we're gonna learn. I mean, we're about to. This current tax code, the Tax cuts and Jobs Act, TCJA, is gonna sunset in 2025.
Yeah,
2025. We got to learn something new again.
Yeah.
Think of you as the business owner. How do you adapt? How do you transition into those new codes? If you're trying to do everything yourself.
Yeah.
So, number one, we already talked about that. Another very important thing: invest in your books. Get some kind of accounting software and track your income and expenses. You're gonna be thankful at the end of the year when tax time comes, right? And you already have everything already categorized. You're not running around with a shoebox trying to pick out receipts and things like that. That is so 1950, right? Make sure you're tracking your income and expenses. Pay people. You got to spend money to make money.
Spend money to make money. Yeah.
Yeah. People, they want to just keep everything to themselves. It does not work like that.
Yeah.
Then another thing is, hey, we already talked about it. If you can keep it within the family, hire a spouse, hire your kids, but they got to be able to, they should be providing bona fide. So bona fide means legit. The services have to be legit. Don't just hire them and then just put them on payroll, because the IRS knows, they know these tricks, right? They're going to come on and say, okay, can we see what is a typical day in your wife's or your husband's business. I mean, a typical day. What do they do? Just tell us a little bit. And then you're like, you're looking up. No, God is not gonna come down and save you at that time. You know. So long story short, do the right thing. Don't try to cut corners. Don't try to get people who are gonna, for us, the law is actually harder, and any sanctions that the IRS ever dishes out are steeper on us than the average taxpayer. Why? Because they know that we know ways to help clients, and if we're deliberately looking for ways to defraud the system, they hit those penalties on us harder. So I always tell people, hey, we're gonna do the right thing. If not, I'm not the one for you, because I have worked so hard to be where I am today, and I'm not gonna try to make you happy by losing my livelihood.
Yeah. Wow. This has been a rich session. I'm so happy that we finally got this done. We will be asking you to come back. I'm just leaving an open invitation right there. Oh my gosh, there's some comments. Let me see if I can read from here. The eyes are terrible.
I didn't even go to
This
the
is a
comments.
highly anticipated show for me. That's what Samantha Richards. Sylvie Menger, nice one. I almost have to come closer to see these. Nice one. The terms really need to be broken down. So the terms were high. So we'll have to ask those questions later. Mary Lynn, hello. Samantha, Samakai Richards. Can you
Sam,
ask
yes.
Elvis?
Hey, Sam, shout out.
Yeah, can you ask Elvis to speak about the new law that took effect this year, the BOI?
Oh, the BOI. That's a good one. That's actually a very good one. Yeah. So that's actually a good point. So BOI, a lot of people are not aware, right? The IRS, actually not the IRS. So the FinCEN stands for Financial Crimes Enforcement something. But the FinCEN is part of the Department of Treasury, and a lot of people set up LLCs to shelter, whatever they're trying to do. So now they're rolling out something called the business something. It's called a BOI. It's a lot of acronyms.
It's okay.
It's been a long day. I'm preparing taxes.
It's okay. We appreciate you.
But it's the BOI. So technically, for anybody who has it doesn't apply only to LLCs. It also applies to corporations that do not meet certain standards. You would have to do an annual filing with the FinCEN, Financial Crimes Enforcement Unit, to report your LLC. So if your LLC has been in existence prior to January 1st, 2024. So any LLC that has been in existence prior, not only LLCs, business, corporations that apply as well, prior to January 1st, 2024, you have through January 1st, 2025 to file that report. If you started an LLC in 2024, after starting the LLC, you have 90 days to file that report. So very, very important. I mean, if you own a business, most likely this is gonna be a reporting requirement. Bring that up to your financial professionals, your accountants, let them know, your lawyers or whoever you're working with, because the IRS is going to be dishing out, not the IRS, the FinCEN. They're all part of the Department of Treasury. They're going to be ditching out some very, very serious fines for people who don't file. Okay. For every entity that you own. So if you have 10 LLCs or 10 corporations, you're going to have to file
for each of them.
Yeah.
Oh. I'm getting nervous now with all these entities.
Yeah. And then the thing too, each time there is some change. If each time there's a change within the LLC, let's say you add another LLC member or you change your address, you have to report it. The IRS wants to keep an eye. I keep saying IRS. FinCEN wants to keep an eye on any changes within the LLC. So very, very important. I'm glad
Yeah, and we have more, but let's let this man go get some rest. I don't want him messing up on anybody's taxes tomorrow. So let's let him go get some rest and let my sister-in-law see him early today at home and my nephew. So we want to
Yes, ma'am.
thank you, Elvis, sincerely. When you have a chance, just go back under the comments and you might answer some of the
Okay.
questions there. I'm going to post your information so people can reach out. You don't have to live in Maryland
Oh yeah.
to consult with him. You can be anywhere in the US and consult with him still. We
Yes.
appreciate you. I thank you for spending time with us and thank everybody who was watching today. Please share the video, invite people to subscribe to the channel so that they can know when we go live. And thank you so much. Until next time,
Thanks for
ciao
having me.
everyone.
Talk to you
I'll
soon.
catch up
Okay,
with you later, Elvis.
okay, sounds good. Bye bye.